Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The dollar is hovering near its lowest level since January as traders increasingly bet on a 50 basis point Fed rate cut on Wednesday. Opinions ahead of the meeting are mixed, with institutions like Barclays and BlackRock suggesting markets may be overestimating the extent of the cuts. The US retail sales data today is the key release ahead of the Fed's decision. In Asia, concerns about China's economy are growing due to disappointing data, pressuring authorities to boost stimulus to meet growth targets. Meanwhile, Indian companies are testing investor appetite with plans for larger IPOs, including Swiggy and the Indian units of LG and Hyundai. Good morning, JK. Markets have started pricing more of a 50 basis point cut than 25 basis points. And since it's a market holiday tomorrow in India, what are your thoughts on the Fed meeting? If retail sales data comes in stronger, do you foresee a 25 basis point cut?
Hey, good morning, Saraj. Yes, the calls for 25 or 25 basis point is the closest that we have seen, with now 50 basis point shouts getting louder by the day. In fact, the market discounting shows almost 69% probability. But the point is, there is no new fundamental driver that has emerged in the last 10 days or so that would argue for a 50 basis points cut. In fact, if you look at yesterday's regional data on manufacturing, the Empire State manufacturing data, it was quite strong, coming in at 11.5%, 11.5 actually. The index was at 11.5%, higher. And the orders index was higher, employment index was not bad. So the latest economic data is not really deteriorating. And if you look at the conditions of the economy also, they are not really arguing for hefty rate cut. But the strongest argument that one would put for a 50 basis point cut will be based on where the rate should be and not, what should be the magnitude. That's because considering, the rates are at multi-year peak at 5.5%, and the neutral rates are much lower. Fed should bring it down much faster than 0.25%, so that the economy does not slump. In basically, it's a strong argument in so to see that the to be a preemptive move rather than the actual current economic situation demands. So that is the situation. But perhaps, as you hinted, there will be some evidence of more evidence of economy when we get the retail sales data from the US today. And last month it had jumped 1% compared to 0.4% that was expected. And yeah, a stronger number can put the Fed in a perfect confusion once again. But I think normally Fed also manages the expectations of the markets well before, but this time perhaps the uncertainty is very high. Um, Maybe we'll see some sort of indications from the data that we get today and official reaction. One more mouthpiece that I think they are using is the former Fed member Dudley, who was once again on the wires yesterday, saying that Fed should cut 0.5%, not based on the data, the recent data, but based on the fact that where the economy is moving, the risk of cutting only 0.25 may be much higher, is his argument. Perhaps this can be the way in which Fed is trying to convey through him, because other Fed members cannot speak as we get into the blackout period ahead of the data. Yes, now the markets, the expectations are being well built into the dollar trend. The eurozone, eurozone trade surplus coming much higher than expected yesterday was another boost for the single currency. which is once again moving towards 1.1150 and then 1.12 that was seen in this cycle peak. And dollar yen, of course, broke the 140 level mark. Since then, of course, it has bounced and staying closer to it, not really breaking down to that extent, because maybe the Bank of Japan is likely to make some sort of a neutral statement on rate hikes. No change from them is expected this week, and they will probably hike only in December. So that, I think, the dollar has to be really pushed down further only if the Fed not only cuts 0.5% but also gives a much dovish statement for the rates going forward. So I think it is too much to assume right now. Markets, there is scope for disappointment, and that is why the markets can rebound from these levels. Yes, we'll have to wait for another 2 days to get the impact of what for what the Fed does on the market. On the rupee, yes, you see, the last time we were in the the dollar index was at 100.5. The rupee was trading closer to 83. The highest that was seen was 83.46 in December 2023, and the low in that month itself was below 83 as well. So we are in a totally different world, and we can see that the entire move here in the dollar rupee towards 84 was not based on any sort of negative development in the Indian fundamentals, but it's purely based on the central bank, which has pushed the rates higher by uh, absorbing all the inflows, and of course not allowing it above 84 is also on the other side. However, you can say that rupee has not really been has actually been working the other way compared to other currencies. Now, yesterday, of course, in the short-term market, you could see that yesterday there was some hint that the rupee trade was getting slightly, on the stronger side, reacting to the dollar moves. But really, if we have to get a bigger move on the rupee to the stronger side, we need the Fed rate cut of 0.5%, followed by a dovish statement by Powell, and then dollar index to break 100. Yes, meantime, Indian stock markets are buoyant, definitely continue to be buoyant. Data shows that Indian equities are the most richly valued markets, but that doesn't really bother the investors who are looking at the growth potential still, and that's why you're also seeing many more companies going for capital raising through the equity market. And looking at the response that we have seen in the recent issues, I am not at all surprised that some more entities are going for it, and I think this will continue. But only thing, this could impact the liquidity in the short term. But beyond that, I don't think. I think it is a good place where India needs to be, but exchange rate is far from reflecting it. Yes, we have a day of gap for updating you. We'll come back with you after Fed meeting outcome on Thursday morning. Thank you.
Thank you, JK. And of course, going into the crucial Fed meeting, things seem quite uncertain. Some saying 50, some saying 25. Of course, the big institutions are saying 25, but as JK mentioned, probably Fed members could be acting through former Fed members by giving speeches, and former Fed members are of the opinion that there should be a 50 basis point cut, considering rates are higher at 5 quarter and the neutral rates are lower. So maybe Fed might just start with front loading the rate cuts. So this uncertainty is strong, and of course we'll update you on Thursday with in detail developments as to what happened with the FOMC. That's it from us today. Thanks for listening. Tune in on Thursday for the latest in the financial markets.